It's going to take 4 quarters for investors to largely accept this new reporting methodology. What Apple's trying to do is direct these investors, and so that's the negative, Carl. The positive is that ultimately this new methodology is very good for Apple stock. And what it does is it promotes this concept of Apple as a service. We're not talking about the services segment. We're talking about the hardware and the services and the whole business operating with more predictability and higher margins. And by focusing on the 2 metrics that matter the most, which is revenue and earnings, that should advance that cause and should be a positive for Apple's multiple.
Mike, I want to get your thoughts on the fact that they're moving away from breaking down the shipments moving forward, because it seems to me this is part of what investors are reacting to today, even more than, say, guidance, is that to take some of that information away, the read-through there is that maybe it's signaling you see shipments going negative, and they're not going to be disclosing that.
Yeah, so talking to investors today, I think you will see some short-term multiple compression just from the change in disclosures. Anytime companies change disclosures, it tends to take the multiple down in the short term. But we think in the long term, it is positive for Apple over time. Also, if you look at Apple on our modeling, they have over 700 new iPhone users. This doesn't include the installed base of people who buy refurbished phones. Out of that 700 million base, we have slowly seen a decline in replacement sales, but given the growing base over time, we do think Apple iPhone sales are very stable over time. We expect very limited growth over the next 3 years, but where else do you see a company that can raise prices in this environment and continue to sell over 200 million units? So we still see good earnings, cash flow generation, and that's why we think the dip today in the stock is a great buying opportunity.
Gene, do you think we're getting close to a potential ceiling on ASPs? What does that do to units down the road? And as Dan Niles explained in his short view in the last hour, what does that do to services potential?
I don't think we are, and part of the reason why we're not close to the ceiling in ASPs is that narrative been around since really the iPhone 6 came out. That was the first large step forward, and then obviously when the iPhone 10 came out, there was suspicion, could consumers absorb that increased price? And in fact, the iPhone 10 last year was the best-selling, most expensive and best-selling, and we've seen evidence of that, the uptake of these more expensive phones. At the end of the day is, even though these prices are increasing, there's more room to go because simply the utility of these phones is great for consumers, and they recognize that. And so, and to your point about the services segment, what investors are going to really hone in on is how services margins are going to progress. And so they did talk about more disclosure around giving profitability on services. And so I think that the grade that investors will give the Apple services segment will be predominantly driven off its profitability, which we think should be a slowly rising trend.
Mike, comments on the call about uncertainty around supply and demand balance. What do you make of that?
I think it's just with Apple launching so many new products, just can they make as many as they want to meet the demand in the short term? So I think that's part of the cautious guidance. FX and emerging markets are things to track that also impacted the guidance. But I think with Apple launching so many new products, as they get up to better supply, you should start to see some of the component prices easing flow through with some gross margin expansion, I think, into 2019. And we think with just looking at Apple's installed base that you're going to see very steady iPhone sales with better prices driving margins higher.
Gene, you probably were asked a bit last night about the China guidance on the call. What do you make of that? And services at 17, I mean, a lot of what we're seeing in the bear case is about service deceleration, deceleration in app downloads, and a lot of that is China-centric.
Yeah, what they talked about was part of their weakness. They gave 4 reasons for the softer guidance. The guidance was 2% below the street for December. One of the fourth reason they gave was emerging markets, but they were quick to call out that China was still an area of some strength. Typically, these larger form factor phones ultimately do a little bit better in China, and so I think that that's driving that. On the flip side, you're probably seeing the services just typically don't have the same uptake in China as they do in other parts of the world, and so there's a little bit of give and take. I think the key takeaway related to China is still a critical segment for the company and has shown for the past 3 quarters improving overall results.